Our partners from Instant Offices, Dominic O'Connor and Alex Cooper, because there's some emerging breaking news around WeWork. Poster child of the property world for the last few years, experiencing some problems to say the least in the news. So welcome, Dom. Welcome, Alex. Thanks for coming on at a relatively short notice. Dom, there's a lot of speculation out there. There's a lot of talk. There's a lot of fear. What are the facts as you guys see it?
Yeah, good afternoon, Andy. Thanks for having us on. So I think you're right. There's a lot of speculation out there. So the facts as we see them. WeWork filed for Chapter 11 bankruptcy protection following a default on some payments that they had on Monday, the 6th of November. And that was following the suspension of trading on the New York Stock Exchange. And I think it's important to say that subsequently WeWork have sought to reassure their customer base that they remain committed to providing a high level of service to that existing customer base, and they're putting a number of incentives in place to ensure that their customer base stays loyal. They have stated that they are closing a number of sites. Now, all of those sites currently are in the US, and there's a list of 70 of them that could be found online to date. They may add more. They have closed down some of their business centers globally, giving short notice to the people that are in those. And where they've done that, they've looked to actively rehouse them in other WeWork stations or service centers close by to try and maintain that business continuity.
Okay, so those are the facts as we see them. What are your customers doing? What are you seeing WeWork customers doing? What are your customers doing, and what are they saying right now?
So look, I think we're seeing WeWork, they're actively trying to work the structure of their finances and ensure that they can emerge from Chapter 11. And hopefully they do as a leaner, fitter organization. But a number of our customers and kind of potential clients, they're looking at their business continuity planning. Right, so the service center that they're in today is still operating as it always has done, and there's no immediate need. But they're looking at the business continuity plan, seeing what their options are, and maintaining a watching brief. Now, there are a limited number of companies out there that work in regulated markets that can't tolerate the uncertainty. So we are seeing some of them actually looking to make a move, but the majority of our client base are kind of maintaining that watching brief.
So really, it's very early in the situation, I guess. So before people are sort of making decisions, the facts will sort of play out, I guess. You obviously talked about Chapter 11, and for those in the UK, Chapter 11 is actually very different to administration almost. It's a bankruptcy protection as opposed to the sort of more formal sort of administration and bankruptcy. So these sort of legal nuances around these laws in each country must make things very differently. Are you seeing different things in different territories?
Yeah, that's right. So look, WeWork is a large multinational organization, and WeWork in each country isn't actually always the same legal entity. So the way that the uncertainty is panning out in each country is different, whether they own the site directly, whether they operate it as a franchise. So there will be local nuances. I think the key thing to take away from them filing for Chapter 11 protection is it's exactly that. It's a protection so that they can get their house in order and hopefully re-emerge following Chapter 11 a leaner and fitter company. And the key point about applying for Chapter 11 is that you have to lodge a plan to emerge from Chapter 11 that's a credible plan. So they've obviously lodged a credible plan to emerge at some point in the future, probably 6 to 8 months.
Yeah, and I think that's important to say that it's not a done deal that that WeWork will disappear. I mean, we've seen from communications companies like Verizon, the airlines certainly after 9/11 and COVID. This is a not unusual thing to happen, and it's certainly very possible that the business could come back in a different form potentially, but albeit it's not a done deal.
Yeah, that's absolutely right. So look, I think they've had a number of challenges. They've invested in a number of properties. We've seen COVID, and we've seen a change in working patterns, and we've also seen an increase in interest rates, which puts their cost base up. So they're looking to restructure, and they're actively working on it. They're actively looking to reassure their customer base. I've got to kind of be really clear here. They have been a strategic partner of ours for a number of years, and we really want to see them do well out of the back of this, but they are facing into some really choppy waters at the moment, if we're clear.
So you guys act essentially as a marketplace. So you bring people who want to rent office space or lease office space to people who have office space to provide. So I guess you've worked with WeWorkers quite extensively.
Yeah, absolutely right. So if you think about WeWork, they're one of the key protagonists in the marketplace. They've made kind of flexible working famous, and it's a bit like when you go in and buy a Hoover. You don't actually go and buy a Hoover, you go and buy a vacuum cleaner, but it's the brand name you recognize. And it's the same with WeWork. WeWork's that brand name that everybody associates with flexible infrastructure. But we've got a number of key partners. We operate in 150 countries globally, and WeWork are one of dozens, scores of partners that we work with around the world. TOG, the office group, Industrious, Ministry, they've all got great assets around, and even Regus. So if you think about Regus and the IWG brand, they've over the last 12 months, we've actually seen their share price increase from 140 US cents. They've gone up to, I think, about 150, 155 cents on the US markets. So despite the negative sentiment that's been created around WeWork, we're seeing other serviced office companies coming up. And the reason for that is because clients, occupiers are fundamentally changing the way that they work. You will have seen, if you get on the train on a Monday, it's very different from getting on the train on a Tuesday or a Wednesday or a Thursday. So what we're seeing, occupancy rates from before the pandemic, maybe 60 to 80%. Now occupancy rates of large buildings are down to around about 35%. People's businesses have fundamentally changed. And what you get with that is a need to invest in flexible infrastructure, because are you going to commit to a lease for 10, 15 years when you don't really know what your business is going to look like in maybe 3 or 5 years because of new technologies, different working patterns, etc.?
I think in the recruitment space, that could be 3 or 6 months based on the previous quarters we've been experiencing. So, yeah, absolutely. I think the days of signing up for 10-year leases, maybe if you're lucky getting a 5-year break in, are long gone. So one of the things I was going to ask as well is WeWork obviously disrupted model. They changed. They took on the traditional way of working, the traditional way of leasing. Is that very much here to stay, or I guess has their product gone out of vogue, or is it more just the company and the more the sort of the workings, their personal workings, as opposed to the product and the need for it?
Yeah, I think what we're seeing is an evolution in the commercial real estate space, right? And people are consuming the space in a different way. People are embracing hybrid working and doing what's right for their company, but also their people. And it's how do you attract talent as well? Do you want everybody into the office the whole time, or can you enable people to work more flexibly in a more agile way? So we're seeing a number of the landlords that are out there and the operators that have traditionally gone for long-term leases and said, do you know what, we're investing in this building, we'll sign it up for a long-term lease and then we'll get a kind of a low annuity out of it. They're mixing their portfolio and they're moving. We expect to see about 30% of the built environment move to flex by 2028 because they can fill it quickly. they can monetize it, and they can receive slightly kind of higher yields from a flexible workspace that they do from the traditional lease market.
Got you. So the reason we bought Instant Group as a partner at Required, you helped a number of our members find and source space in the UK, in the US, in a number of other countries. And I'm interested to see what the process is. So we've obviously talked about the sort of the broader market, but practically, I've got a recruitment company. I'm either currently in a property I need to exit, or I'm going into a property. Alex, it'd be good to understand what working with you guys looks like. So I don't know if you've got anything you can bring up and show, just in terms of what that looks like.
Yeah, certainly. Our typical engagement with a company looking for a new office space would be for us to take an initial brief, who, what, where, when, why, and how much, how many, all those key details, and then we would pull together a market report, which I'm going to screen share now. We onboard any and every serviced office provider globally. So I'm going to screen share a report which we pulled together for SE1. We're in the Bluefin building, so it's a patch that we know well.
I was really interested into your statement of the why as well. So, I get where, when, but the why is super interesting.
Yeah, and it varies massively. So much disruption in the market over the last few years has resulted in flexibility being key for all levels across the organization, whether that's for financial reasons, for HR reasons, for client facing, for back office. There's so many different reasons why customers are moving to serviced offices and new serviced offices. And WeWork really changed the game on that front, in how they made it cool to be in a serviced office. And certainly attracting talent, retaining talent, having a place of work which people want to go and collaborate well in, is something that's been replicated across the market and really rolled out. And in the big cities, there's a serviced office on every corner. So there's lots of reasons why, and there's lots of answers to the why in the market. So this is an example of a 20 desk plus meeting room serviced office market report. And what we would typically do is put a dot on the map of where you might be currently or where you want to be, and around that area, in this case, top 10 recommended solutions, of which we would have on each pricing, sizing, and amenities, which vary in each location, but there's always some themes. And then off the back of a long list, we compile to a short list and encourage and arrange some viewings of various properties, and then help with negotiating the best deal for each scenario.
And you don't charge for this service, so it's basically free for our members and free for anyone until actually you find someone. You act as a broker in this sense.
That's correct. The license agreements are between company and landlord operator. The Instant Group, we get a finder's fee, which doesn't impact what the tenant spends. If anything, will save you money rather than cost you more money, and will most certainly save you time.
Yeah, and Andy, it probably helps to think about it. So, when you go and get your mortgage and you go to an independent broker and independent financial advisor, they'll look at the whole market for you, and they'll make recommendations based on your needs and your wants, right? And because they've got that relationship with the bank, you don't pay any more for going through an IFA than you do going directly. And as Alex said there, typically we've got data on what the average desk rate is in any city globally. We've got data going back years. So we can tell you exactly what you should be paying and how to negotiate the best rate so that you get the right space at the right price with the right levels of service. And I think one of the key things around serviced offices is you've seen a step up in what people expect when they go into the office. They do provide a really great service. There's some of them out there that are providing just excellent workspaces. And it's a bit like, I'm old enough to remember going in to order a coffee, right? You used to just go in, order a coffee. That's gone. Everyone goes in, they order a latte, they'll order a caramel macchiato, whatever it happens to be. And it's that level of service has just increased. So now everybody expects that. It's the same in the office market. It's that level of service that you get, that friendly welcome, the gyms that you find there, the bars that you find there, so that you really kind of create a great environment for people to do their best work and meet with their colleagues.
Right. No, I mean, I think that's super interesting that you know, rather than, effectively starting with Google, looking for serviced offices, asking around who's in where, that you guys actually have this information and you do it as a very consultative long list followed by a short list. Very similar to recruitment. If you're a hiring manager looking for, specialist staff, go to the market, go to the people who do this all day, every day, and can get that. And as I say, it's it looks like a really sort of time-saving and potentially money-saving operation. And it's not just service offices you do as well. Dom, you were telling me you do sort of longer-term leases as well, where you can.
That's right. Absolutely right. So we look at serviced offices, and serviced offices, you buy into a brand. You are looking for something that's immediately available, but because it's immediately available, you do pay a premium for it, right? They've done all of the hard work, they've taken all of the risk, and you can go in and you can start next week in that office for as short or as long a period as you want to sign up for. But there's other companies that they can't use a serviced office with shared spaces because of regulatory or kind of client privacy. If you think about a law firm, perhaps they can't go and use shared spaces. So for those types of organizations, we can create their own space, their brand, their way. It typically works out cheaper than access to a serviced office, even though it is bespoke to their needs. However, the one drawback with that is that it does take time. Obviously, we've got to build that environment. So instead of being immediately available, it takes maybe 3 to 4 months once we found the right place for you. But you get a really bespoke solution that meets your requirements for your business.
And your name above the door, which is the most important thing.
Well, brand consideration, it really is. It really is. And then that puts you, a real visible presence and something for your people, to have a great experience when they come in.
I think that's really important to say. I mean, I joined Huxley Associates back in the day because they had a really cool office. It probably by modern standards not cool, but it was 6th floor, view of the city, wood floors. It looked amazing. And I think back to some of the great offices I'd worked in, it made you feel really good about yourself that you actually worked in a great space.
Yeah, that's right. And if you think about it, we're social animals. We're humans. We want to interact with other people. Now, you can work from home, you can get things done, but the experience that people want when they get into an office, it has to be a really great one, right? Every time they get in, so that what we're competing with nowadays is people's front room or their office at home, where they can take the kids to school. They don't have to burn time on the commute. So that office experience to bring the top talent into the office has to be a really great one, like you had, so that it fosters that sense of team, that sense of camaraderie. And ultimately, it's a bit like maybe going to a concert or going to a football match, right? The best view is on the TV at home, but the best atmosphere is in person. And that's what you get when you get into an office space.
Yeah, fully agree. I think, I predominantly work from home, but I love the buzz of going in and meeting customers and potentials at offices. And I think more and more, I'll go and end up working in a co-working space for a day as well, just to get that sort of feel. And I agree with you. I think you lose a lot by, but the world of work's changed. Jens, thank you so much for jumping on. It's obviously a moving topic, so if anything significant happens again, next time we'll get you on as well. Alex, if people do want that consultation, what's the best way of getting hold of you?
alex.cooper@theinstantgroup.com, and we've got teams of experts on this topic globally in every main city. So we would be more than happy to speak and meet and present solutions to anybody who would like some.
Fantastic. As well, if anyone just wants to comment on the LinkedIn below, just put your details in comments and arrange callbacks for you as well. So thanks again, guys. It's really appreciated, and I think some very clear, sensible information around what people should be doing right now with their portfolios. So thanks again.
Well, thanks for having me.